So I think obviously in the near term, it's rough. I mean, Bitcoin price is down. We're here at a conference and we're in a deep bear market. So thanks for everyone for coming out. Bitcoin's dead. Everybody go home. Just kidding. So obviously it's not great for price in the near term. And if anything, it's funny. We've seen in the past week, we've seen kind of a rally in a lot of assets because we had sort of a top in the dollar index. Inflation came in a little bit lighter than expected. And that allowed a lot of things like that Bitcoin's been somewhat correlated this year, like gold and the NASDAQ, for example. They've rallied hard. And Bitcoin probably would have rallied pretty significantly this week if not for this industry-specific debacle. So it kind of sucks, obviously, in the near term. But I think in the long term, it almost couldn't happen any other way. That this kind of malinvestment, this kind of leveraged casino stuff has to blow up. And it sucks for the users, but I think it's part of the process.
Bitcoin is due to copy gold's explosive 1970s breakout as it becomes the world's hardest asset in 2024. That was one forecasted from the latest edition of the Capriol newsletter, a financial circular from research and trading firm Capriol Investments. Hello and welcome to Money Talks. In today's video, Lyn Alden updates about her outlook for Bitcoin in 2023. She also breaks down the importance of regulatory clarity in the space and how it will drive the future of institutional adoption in crypto.
So I think malinvestment, by definition, has to die eventually. Otherwise, it was not malinvestment, right? And so if it is malinvestment, and I think we all agree that this was potentially fraud in addition to malinvestment, but so this was like a double whammy, right? But if you have malinvestment, it has to die eventually. And things that are just heavily built on speculation die eventually, especially if, like I said on my prior talk up here, that it's one thing to gamble and know that you're gambling. If you go to Vegas for a fun weekend, sure, have fun. The risk comes when people don't realize that they're gambling and they're gambling. And so I view most of the kind of like FTX and similar things as almost like an extension of fiat. It's like late stage fiat. They took a lot of fiat ideas like leverage and the necessary of interest rates and kind of brought that into the quote unquote digital assets realm. And I think that the actual innovation is Bitcoin. The actual innovation is true decentralization, hard money, censorship resistant transactions. That's the innovation. And like 99% or more of what we're seeing out there. I mean, there's interesting experiments, but anything that involves tokens and seigniorage and speculations and leverage is just like it's a scammy fiat kind of industry built on top of it. And it kind of has to blow up. And actually, when I was up here before, Alan Farrington made a good point that it kind of has to blow up together due to how interweaved we all found out it was. Now, there could have been a different timeline where there was more sideload leverage. It didn't have to be this interconnected, but it is natural for these things to develop like this. But because it turned out to be so interconnected, it kind of all had to fall at once, unfortunately.
Despite BTC price action flagging at nearly 80% below its latest all-time high, not everyone is bearish about even its mid-term outlook. While calls for a further drop before BTC USD finds its new macro bottom remain, Capriol believes that 2023 will be bright for Bitcoin as a reserve asset. The reason, it says, lies in the world economy's financial history of the past century, and in particular the United States after the dollar de-anchored from gold completely in 1971. Gold, as the world's premier safe haven of the time, saw huge gains during the decade, and 50 years later, it is Bitcoin's turn.
I think the first step is to understand the difference between Bitcoin and everything else in the space, right? So Bitcoin does not pass the Howey test, which is, I know it's jargon for some people, but basically it's a test that's been around for many decades to determine if something is a security or not. So Satoshi didn't raise capital. He just kind of put this open source code out there. He didn't pre-mine it himself. And there are multiple things, if you go through the step-by-step list of the Howey test, Bitcoin clearly does not pass it and therefore is not a security. Whereas when you apply that same test to other cryptos, the vast majority of them seem to pass that test and are likely securities. And some of them have been specifically ruled to be securities. Other ones is still technically gray, but when you actually look down at the list, you're like, it's probably a security or like basically an equity. And so I think we need more clarity from exchanges. And I would agree that, Michael gave a good talk about that. I think we need more clarity about regulation. onshore. And I think the main thing is for policymakers to understand that Bitcoin is very different from everything else in the space, and that its nature is not inherently speculative in the same way that other things are, right? So you can speculate with Bitcoin. Many people do speculate with Bitcoin because it's a volatile new asset. People are going to speculate with it. But the underlying use case, why it was designed and the way that many of us use it, is not speculative. And I think I think we're going to see a bigger and bigger divide between the Bitcoin-only space and the rest of the crypto space. And I think over the past couple of years, with the rise of Bitcoin-only companies, we've seen that divide growing, I think, and it's only going to trend. And of course, there are other things like stable coins and things like that that are interesting too. But outside of, say, Bitcoin and stable coins, I think a lot of the other part of the space is really going to be delegated to the realm of casino land. And so if you look over the past 40 years, if anyone has seen like an interest rate chart, for example, you start out at a very high level after the 70s, and you have 40 years of lower lows and lower highs of interest rates. And that's allowed for higher and higher asset prices, whether it's real estate, whether it's equities, just higher and higher. And my thesis for the past couple of years is that we are entering a structural change where once interest rates get all the way to zero or negative in some countries, that there's really not much further to go, and debt is already super high, and so we're going to start entering this regime of sideways to higher interest rates, which means generally lower average valuations, and generally just a lot more like turbulence in macro markets. It's not that constant 40-year bull market. It's not that thing of just things always go up. When we look at, say, for example, the U.S. stock market, stocks go structurally up over and over again. But there are like these long periods of time, whether it's, say, from the year 2000 all the way to 2011 by the time it surpassed it in inflation-adjusted terms, or you go back to the 70s, you basically had this choppy sideways stock market for over a decade, or you go back, of course, to the 1930s, and it took a very long time for the stock market to recover. And I think, especially in inflation-adjusted terms, I kind of think we're in that environment. And I think we have to think differently about the market regime we're in now compared to any time in the past 40 years. I think we're going to be in a more constrained world, less globalization, and a more difficult energy.
Bitcoin is not about to bottom at just below $17,000, warns a new analysis as bid liquidity dries up. In social media posts after Christmas, on-chain analytics resource Material Indicators flagged waning interest in protecting the current BTC price range. With volatility still largely absent from Bitcoin markets, analysts are keenly eyeing what could happen at this week's yearly close. The closing price for BTC USD on December 31st will also mark the conclusion of the weekly and quarterly candles, and any flash volatility could turn 2022 into a nightmarish bear market year.
But I think the base case to at least be aware of, or to look for and expect, is a more stagflationary type of environment. We could very well be in an environment, like right now, for example, if anyone's seen the latest inflation print, the official inflation rate is at a very high level, but it is falling from its year-over-year peaks. And you see things like used car prices and house prices, they're kind of coming down, but we still have very sticky energy prices. And I think that's where a large part of the problem can be, right? So you can get certain things under control, certain supply chain issues, but we still have a structural underinvestment in energy. And when we look back over the past year, for example, we've had the Fed raise rates almost as fast as they've ever raised it. They've kind of rivaled, even though they haven't rivaled Volcker, the 1980s, in terms of how high interest rates got. They have rivaled Volcker in terms of how much you raise in a single year. So they've already been super hawkish. They've already drawn down their strategic petroleum reserve, which is trying to fight energy inflation. And I think a lot of that is now behind us. They're still going to raise rates to some percent more. But they've already drawn down the oil reserve so much. I think we're going to be in an environment of more problematic energy scarcity, higher energy prices, even if some other prices settle down for a period of time due to demand destruction or due to supply chain normalization. And I think that's going to be an ongoing problem. And I think that the type of stimulus that they do is going to be a little bit more surgical. It could be energy stimulus. It could be things like that. It could be even the combination of higher rates combined with some sort of liquidity program, for example, on the sovereign bond market. And I think that's not going to be the type of all-out environment where just you buy every risk asset and it goes up. I think it's going to be a much more selective environment. You have to own quality rather than just own everything. When we think of Bitcoin, we also think of it in a developed market perspective. We think of it as a United States person. We think of it as a European, for example. And people are like, why do you need Bitcoin? What is Bitcoin useful for? Whereas when you go to Argentina or Nigeria or dozens of other countries in the world, it's far more obvious why people need Bitcoin and why they might be interested in it, and why they might be interested in things like stable coins or things like ways to get US dollars, basically various types of harder money than whatever their local money is. And when the dollar gets super strong like it is now, the Fed is increasing interest rates, they're doing quantitative tightening, and they're trying to rein in inflation. And the problem is that there are so many countries in the world that buy commodities in dollars, right? So they're having a much harder time buying commodities. And then a lot of them have dollar financing. They have dollar-denominated debts from European lenders, from American lenders, from Japanese lenders, from Chinese lenders. These just dozens and dozens of countries in the world get squeezed when we do this. And imagine you're a country and basically another country can dictate your monetary policy for you. That's kind of the world we live in. And what Bitcoin comes around and does and says, here's an alternative. It's new, it's volatile, it's poorly understood, but it doesn't change its monetary policy based on the decision of a handful of people in a room. The Fed is basically a council of elders that sits around and determines the price of money, right? And Bitcoin doesn't have that. It's an open network. And so right now, kind of for lack of a better alternative, all the countries in the world, and especially the periphery countries, are tied into the dollar system. And so they're at the whims of the Fed. They can loosen dollars, and that usually what happens is these countries go out and they take on a lot more dollar-denominated debt, but then that comes back to bite them when the Fed can then arbitrarily at any time increase interest rates, strengthen the dollar, and it's like all of your liabilities are being hardened. And so what Bitcoin comes around and does and says, here's an alternative, and here's something that's worth exploring.
Bitcoin is currently down 60% year to date, while it has lost 76% versus its latest all-time high from November 2021. This may still not be enough to cap the bear market, various analysts have warned, and now order book data appears to underscore the potential for fresh losses.
And there's been a lot of focus on nation-state adoption. And I think that's healthy. I mean, it's obviously a big sign of ongoing structural adoption when nation-states adopt Bitcoin. But of course, you can't impose education from top down. You can't impose buy-in from top down. And when we look at politics in general, grassroots movements are always more powerful than like who has the most money for financing, for example. If the candidate's not right, it doesn't matter how much money you throw at it. And it's kind of the similar thing. If people don't understand Bitcoin, it doesn't matter if the government mandates it or not, or mandates its legal tender. And so I think nation states can do a lot by making it not a taxable currency, but I think that actual adoption has to come up from these much smaller communities. And one thing we've been seeing over the past year or two, especially the past year, is that they've kind of replicated the Bitcoin Beach model, where you have Bitcoin Lake, you have Bitcoin Island, you have Bitcoin Jungle, right? There's little communities popping up in Costa Rica, Guatemala, Vietnam, Isle of Man. There's basically all these different little communities popping up. And I think that's only going to accelerate.
So what are your thoughts about Bitcoin's performance in 2022? How will it perform in 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.